crypto is not just monetary, it's also basically a technology investment. And again, sort of the comparisons with the late 2000 is not entirely correct, because in the dot-com bust, what happened is that VC investment evaporated pretty quickly. And that caused a lot of issues in the market for a few years. What we're seeing in crypto is the opposite of that. We're seeing a big surge of venture capital investments into the market. So just kind of to give you a historical perspective, I mean, there was a 7 times increase in VC investment in 2021. And there seems to be a lot more coming down the pike. So just going through the announcements, I mean, Andreessen Horowitz in summer last year announced a $2.2 billion fund, at that time, the greatest ever crypto fund in existence. Well, 3 months later, Paradigm Ventures beat them with a $2.5 billion fund. Then Citibank jumped into the fray. They launched HiveMind Capital, that's $1.5 billion. And what's also new is that a couple of crypto exchanges, which historically have not been VC investors, actually launched pretty big funds. So FTX, $2 billion fund in January, and Crypto.com, another $500 million in January. All of these funds will start getting disbursed in 2022. I mean, these VCs they cannot be sitting on cash forever. They will have to go and start putting it to work. The traditional VCs, who in general, a lot of them have been avoiding investing directly into crypto tokens, preferring to invest in crypto equity, we're starting to see signs of a turnaround on that front too. And I think the Sequoia announcement this month is actually quite a bellwether. Sequoia never invested in crypto tokens, but they did invest about 20% of their total deal flow in crypto equities in 2021. This month, they announced a $500 to $600 million crypto fund, which specifically will be going into more liquid tokens. And they're actually changing the structure of their whole firm to sort of step away a little bit from the 10-year lockups and the illiquidity, and moving it towards a more liquid, more sort of investor-friendly structure. And you know, Sequoia is the kind of the Goldman Sachs of the VC world. They tend to have a very good reputation, and a lot of people are likely to follow them. They sort of gave permission to the other VC firms to consider seriously this approach to the markets. So I think we'll be seeing something like $10 billion being deployed into this market just from these big name firms that I have listed here. And all of that is going to be invested in building out the ecosystem. So at this point, there is not much interest on the VC side in investing in another layer 1 network. So, you know, if you wanted to go out there and start another Ethereum competitor or another, I don't know, another Solana competitor, you probably would have not a lot of traction. What the VCs tend to be much more interested in is building up all the missing pieces. They're building out the ecosystem that makes it easier to use the existing digital assets, and that makes consumer penetration pick up. The beauty of that is that by spending money on the ecosystem, they're actually increasing the values of the tokens that there are the protocol tokens. So the more services there are available on the Ethereum network, the more valuable the Ethereum tokens are likely to be. And the same thing goes for all the other protocol tokens. So from our perspective as investors in the liquid tokens, we think that this is a dynamic that certainly was missing from the tech markets in early 2000s. And I think it's very promising in the medium term. Certainly in this year, I think we'll be seeing some benefit from that.